Hey, good afternoon, traders. This is Trader Tim from over at emoneymind.com, and we're doing a trade recap for the 5th of August. It's Thursday, 2021. Before we get into a couple of trades from today, wanted to touch on just the daily chart here. You can see the 50% trading has a negative 23% target at 44.62, and today we closed up at made a new high in the ES here. Very likely that we'll be able to get up to, even if we get to 44.50, I would consider that close enough. And especially if we have a gap up and then go, and 2 of those days in a row, I'll be looking to put on a hedge, buy some puts in like the SPY, and see if we can't get a little short-term pullback to this, at least to this steeper trend line. You can see we've come, quite a ways off of it, and then we've got these pullbacks to it. It's happened twice now, or really 3 times if you go back here. And so as we start to get away from this trend line, looking for opportunities to maybe get short on like a gap and go day at the close if we do get something like that. Otherwise, if we just trend sideways and tag up on the trend line, there's not really a good opportunity to put on a hedge at that point. So before we go into intraday stuff too, another way to hedge or an opportunity that exists right now, if you have, let's say you have some outstanding debt, whether it's consumer debt, student loans or something like that, something that's higher interest, even 5 or 6%, not really talking about your house mortgage, but if you've got money in a non-retirement account, so like a brokerage account, um, and especially if you've been invested for more than a year, not a bad time if you got 30, 40, $50,000 in student loan debt or some other kind of debt on a truck or something. It's not a bad time to cash out some of those investments and pay your long-term capital gains tax and knock off some of that debt because especially if you're talking being invested for more than a year, things have done really, really well pretty much across the board. And so that's a good way to reduce some of your risk, position yourself a little bit better, for the next pullback. Without that debt lingering there, you're able to put more money into the market when you do get a pullback, and a lot of times it just helps people sleep at night. So we talk about hedging by buying puts to hedge an existing position. Well, you can also cash out. You don't have to cash out your entire portfolio, but a little chunk of it. You got $100,000 in a regular brokerage account, and you want to take 30, pay your capital gains, and then knock off the rest of your student loans. I mean, that's definitely a viable option up here because things have just gone pretty much straight up all year long. So let's go into. Let's start with yesterday, actually. I didn't have a trade yesterday, but I'll show you where I was trying to get in at this halfway back of the day. Well, halfway back using the swing high from the prior day. I do that a lot, trading hours only, and then take like the swing high from the close, and then I grab the swing low at the open of yesterday. You can see that over here. Actually, let me link up my charts. Default. There we go. So we were trading up in a series of retracements here, traded up, and then I used this swing low up to the swing high here. At first I drew it here and I extended it up like that, and so because that was the long that I had drawn up, and you can see we came down and touched it here, I did not take the short here at 44.06, and that was really the only opportunity to get into that short. So I played it a little bit too conservative. I probably could have come in here and say, well, this swing low broke, or even if you used, the swing high here, you could say, well, we took out the swing low and also took out the 61.8. But I didn't play it that way. I tried to get short over here, and it came to my order 44.0550, but I didn't get a fill, and so then I tried to extend that down like this, and we didn't even get to the 50. So I don't know if I would really call it a mistake. I just played it a little bit too conservatively, and so I wasn't able to capitalize on that rollover move down. And you can see the 50% came right down to the negative 23. And so if you are short on the 512 tick chart, it's definitely in your best interest to try and, trail the swing highs so that, you can stay in and try to stay in till the larger negative 23% target. So like here on the 512 tick chart, its negative 23% target is 4403.92. Well, because we're entering at the same area that a larger 50% retracement has started its trend, keep that larger negative 23% target in mind. So as we go, I'll show you the two trades from today, and you'll see how that comes into play. So scrolling forward to today, fared a little bit better. Okay, so this morning, I'm just going to get rid of all this for the moment. We'll put it all back. So from the open going swing low to swing high, came down to the 50%, made it up to the negative 23% target, drew up the next retracement, and this is where we were. So this gray line up here, 44.12, is the top of the first 30-minute range. So again, we came down, didn't break the 61.8, so I chose not to take this as a short, which I think would have ended if you did 44.10.50. And then we came up to 44.12.50. So with a 2-point stop, that would have just ticked you out. And so it is in your best interest to wait for the 61.8 to break. Or even I've heard of it, some folks, referencing 65% to give yourself a little bit more wiggle room. But once that broke, we made the full 50% retracement like this. And so the long traded before the short traded. So that means the long has a little bit more weight than the short. And if we come over in here, what I did, we came down, touched the 50%, we bounced, but we didn't break the swing high yet. Came down again, traded just a tick or so below it, and then we came up and broke the swing high here. And this one actually traded too quickly. As soon as I drew it up like this, we were already trading on top of the entry. It would have been at 875, so I couldn't get in right there. I don't like to click my trade ladder, like drop an order when price is already there. It's a little bit too quick, so I ended up extending it over here. We still hadn't touched the opposing long yet, so I got in here, 875, and then we broke the swing high. This is the swing high right here. We broke that, and I did move my stop to break even, and then we ended up retesting, and so I got taken out for scratch. And this one ended up running pretty nicely. So what I did to re-enter then is I just followed along. Okay, we traded from this little double bottom here, traded up to the negative 23% target. I drew up the next setup. Okay, the short is still holding at 61.8. That's right here. And then when we broke that 61.8, I did what I would call like a straddle, is where I took, so here's the first retracement, here's the second retracement, and now we're on to the third retracement. And notice how this anchor point is below the 50% of the short, and then this upper anchor point is above the 61.8. So it's like straddling that opposing. So it is the third retracement in the trend. The 50% on the 5-minute chart, 4407, that's the larger 50% that's in play. And so basically taking the long there. And things were moving kind of slow. We were already an hour and change into the day. And so even though these were like one candle pullbacks, it was like a couple minutes for this to form. So like the first anchor point is 41, 42, and then by the time we were at the 50%, we were like 44. So it wasn't happening super fast. If this was happening over the course of 30 seconds, it would have probably been harder for me to get in. So 44, 10, 50 is the, go back to my notes here. Yeah, 44.10.50, the long entry. And then when we came up and then kind of moved sideways, the market then broke. Let's see here. So this is going back to the larger 50%. Look at where its negative 23% target is, just up here. And so trailing the 61.8 like this, when we came close to the negative 23, rather than leaving my stop at the swing low down here, I drew up the next retracement to raise my stop up a little bit because we were at that negative 23 on the 5-minute chart. So you want to be aware of where you're at within the trend, and the 5-minute chart is a good way to help reference that. So, and then like going back to the actual entry itself, when you draw up the opposing setup like this, a lot of times like 44.10 is still 5 points away from the negative 23% target, so it's enough to get a 3-point first target at the very least, and then possibly go even further. So that's how I played those two today. And we got one more day tomorrow going into Friday, and looking for possibly a gap and go day. Otherwise, if we just kind of drop down again like we've been doing the last few days, red day, green day, red day, green day, we could just pitter out into one of these spinning top candles and not do much of anything. So if you have questions, drop them in the comments below, and I will talk to you all very soon.